Welcome back, everybody, to the Deep Dive. And today, we're going deep on something I know a lot of you are really interested in, trying to predict Bitcoin's price.
Yes, the million-dollar question.
Well, we've got a ton of sources you guys have sent in, so we're looking at everything from what actual analysts are saying to these wild models like the stock-to-flow model. We'll even look at how things like Bitcoin ETFs could impact the price.
Yeah, and it's fascinating stuff. I mean, everybody wants to know where Bitcoin's heading, but it's super hard to predict, right?
Right.
What's really cool to me is how each of these approaches, they all come at the problem from such a different angle.
For sure.
Yeah.
Well, let's kick things off with, the folks actually trying to make a living doing this.
Yeah.
The analysts, they use this thing called technical analysis. It's basically like looking for patterns in price charts, right?
Exactly.
Things like moving averages or these candlestick patterns.
Mm-hmm.
Are those terms, like, do they actually mean something, or are they just trying to sound cool?
Oh, they definitely mean something. Like, take candlestick patterns, for example. They actually visually represent price movements over a certain period, so
Gotcha.
they can help analysts see if a trend is about to reverse or keep going. And, even if those names sound kind of, I don't know, mysterious or something, these tools actually give analysts a way to make sense of how the market's behaving.
So there's some real analysis behind those fancy names. Okay, that makes sense. What about this sentiment analysis? That sounds a bit more like reading the room, kind of.
Yeah, that's a good way to put it.
Yeah.
Sentiment analysis basically tries to figure out, like, the overall mood of the market. Are people feeling bullish or bearish about Bitcoin?
Yeah.
So analysts will use these, like, super sophisticated tools to scan all sorts of stuff. Social media, news articles, even reports from big institutions, just to get a sense of, like, the collective sentiment around Bitcoin.
Right. So if everyone's on Twitter just screaming, "to the moon,"
Right.
does that mean Bitcoin is about to actually, like, take off?
Not necessarily. I mean, sentiment, remember, is a really fickle thing, It's super easy to get swayed by hype and just pure speculation. So while it can be a useful indicator, especially if you're looking at the short term, it's definitely just one piece of the puzzle.
Right. It's not a sure thing by any means.
Yeah, exactly.
Gotcha. So it seems like even the pros, they're using a mix of data and, I guess, gut feeling in a way.
Yeah, a bit of intuition definitely plays a role.
Yeah. But how accurate are those predictions in the end? Like, are they actually hitting the mark?
I mean, that's the million-dollar question, right? And while some analysts have a pretty decent track record, it's important to remember these are still, at the end of the day, educated guesses, right? You never know what's going to happen. And the market is always going to be influenced by, unexpected events, like what they call black swan events. Nobody sees those coming.
Totally. Like that sudden crypto crash we saw back in 2022. I guess even the best analysts can get caught off guard sometimes.
Absolutely, yeah.
Yeah. Wow. Okay, so if expert predictions are kind of iffy, are there more objective ways to try and figure out where Bitcoin's price is headed?
Yeah, I mean, there are. And that's where these different models come in. One that's been getting a lot of attention is the stock-to-flow model, or S2F for short. Basically, it's built on the idea that scarcity drives value.
Okay, I'm intrigued. How does that actually work?
So it's actually a pretty simple calculation, at least in theory. You take the existing supply of Bitcoin, so that's like the stock, and you divide it by the rate at which new Bitcoin is being created every year. That's the flow.
Right.
And what you get is this ratio that kind of shows you how scarce Bitcoin is relative to its production.
Okay, so the higher the ratio, the scarcer the Bitcoin is,
Yeah.
and in theory, the higher the price.
That's the general idea, yeah. It's actually similar to how gold, which is a traditional store of value, right, gets its value because it's scarce. And what's really interesting is that this S2F model, it has actually been pretty close to Bitcoin's price movements in the past, especially after these things called halving events.
Oh, yeah. The halvings. I've heard about those. Those are when the reward for mining Bitcoin, it like gets cut in half, right?
Exactly.
So that makes Bitcoin even more scarce because it slows down how fast new coins are being made.
Exactly. And if you look back historically, these halvings have been followed by some pretty big price increases. In fact, the S2F model even suggests that after the 2024 halving, the ratio for Bitcoin could end up being close to gold, which would be a huge deal.
That's wild. So is this S2F model like the holy grail of Bitcoin price prediction, like as we crack the code?
I wouldn't go that far. I mean, it's a really interesting model, don't get me wrong, but it definitely has its critics. Some people argue it's too simplistic. It focuses so much on scarcity, that it kind of ignores demand. And it also doesn't really factor in those market cycles, those booms and busts that can just totally throw prices off, no matter how scarce Bitcoin is.
Right, because scarcity is a big deal, but it's not the only thing driving the price.
Yeah, for sure.
Okay, so what about another popular model? The BTC Power Law model. This one sounds pretty powerful just by the name.
Right. So this model is based on this observation that Bitcoin's price growth, if you look at it on a logarithmic scale, it seems to follow this exponential pattern. So basically, even though Bitcoin has those wild swings, the price tends to stay within certain bands on that logarithmic chart.
Wait, hold on. Logarithmic scale. For those of us who aren't, math geniuses, can you break that down a bit?
Sure. So think of it like this. A logarithmic scale, it kind of squeezes large price ranges together, which actually lets us see these long-term trends more clearly. So it's almost like using a special lens to view Bitcoin's price history. You know what I mean?
Interesting. So it's a way to see the forest for the trees.
Exactly.
Okay, gotcha. So even with all the crazy ups and downs, we can still see those underlying patterns. Does that make sense?
It does.
Okay, cool. Does this model have any practical uses? Can people actually use it to make decisions about Bitcoin?
Yeah, so it can help to identify potential buying or selling opportunities.
Oh, really?
For example, if the price dips way below that lower band on the chart, it might be a signal that it's a good time to buy.
Okay.
And if it goes way above the upper band, might be a sign that it's overvalued, right?
So it's less about predicting an exact number and more about understanding where Bitcoin sits within these long-term trends.
Exactly.
That's actually pretty clever.
Yeah.
But I'm guessing this model has its limitations too.
Oh, of course. I mean, anything that relies on historical data is going to have trouble with predicting the future, right?
Right.
Like, what if something totally unpredictable happens that's never happened before?
Right.
And plus, it assumes the market conditions are going to stay pretty stable, which we know with Bitcoin, that's definitely not always the case.
Yeah, that pesky real world. Always messing with our perfect models.
Always.
Well, speaking of the real world, I'm curious how the miners themselves, the ones who are actually creating new Bitcoin, how do they impact the price?
Yeah, that's a great question. And that's where this thing called the miner supply model comes in. It looks specifically at how much it costs to mine Bitcoin.
Okay.
And how their actions, the miners' actions, actually affect how much Bitcoin is out there.
Okay, so help me understand this. How does the cost of mining relate to the price of Bitcoin itself? Is there a connection?
There is. So think about it. Miners have to pay a lot to keep things running. Electricity, these specialized computers that do the mining, cooling systems to keep everything from overheating, it all adds up.
Yeah.
So if the price of Bitcoin drops too low, it's actually not profitable for them to mine anymore. So they might just shut down.
Right, because they would actually be losing money at that point.
Exactly. So because of that, there's kind of a price floor built in. The cost of mining basically sets the lowest price that miners are willing to sell their Bitcoin for.
Makes sense. So that cost of mining, it acts like a safety net in a way, right?
Yeah, you could think of it that way. It can actually help keep the market a bit more stable. But the thing is, that price floor, it's not fixed.
Right.
It changes all the time. It depends on stuff like technology, if there are new advancements, or energy prices, or even government regulations can mess things up.
Wow. So it's this constant push and pull, right?
Yeah.
Between the cost of making that Bitcoin and how much people are actually willing to pay for it. It's fascinating.
It is.
So how can we keep track of what the miners are actually doing? Is there a way to do that?
There is. One way is to watch the hash rate.
The what?
The hash rate. So it's a measure of how much total computing power is being used on the Bitcoin network at any given time.
Wow, okay.
So if that hash rate is going up, it usually means more miners are hopping on. Right?
Okay.
And that usually means they're optimistic about future prices. They think it's worth investing their resources.
So it's like a real-time measure of how the miners are feeling. Right. If they're putting more resources in, they must think the price is going up.
Yeah, it's a good indicator, but it's important to remember that miners, they're also influenced by, all that external stuff. Things like overall market sentiment, what's happening with regulations, all that.
Sure.
Imagine if suddenly some big country that mines a lot of Bitcoin, they decide to crack down on mining.
Oh, okay.
That would totally change the hash rate and it could really impact the price.
Right, because Bitcoin lives in this crazy world of technology, economics, and even politics, right? Like no model can perfectly capture all that.
It's true.
But I'm noticing a trend here. It seems like all of these approaches, they all look at Bitcoin's price through a slightly different lens.
That's a great observation, actually. And it kind of shows you that predicting Bitcoin's price, it's not about finding one right answer.
Right.
It's more about understanding how all these different factors work together, and recognizing that each approach has its limits.
That makes sense. It's like
Yeah,
we have to look at the whole picture from all these different angles.
exactly.
Well, so far we've talked about what analysts are saying. That stock-to-flow model, the the BTC Power Law model?
Power Law, yeah.
The Power Law model, and even how the miners play a role.
Yeah,
It's a lot to take in.
it is a lot. And we've only scratched the surface.
Oh, no!
We've still got to talk about Bitcoin ETFs.
Okay.
And those historical price cycles, those boom and bust cycles that Bitcoin is famous for.
Oh, boy. Yeah.
There's a lot more to unpack there.
Well, luckily for everyone listening, we've got a whole deep dive dedicated to all of this. But before we jump into that, I want to remind everybody to leave a comment down below and let us know what you want to learn about next.
Yeah. We love hearing from you.
And don't forget to subscribe and hit that bell so you don't miss out on future deep dives.
For sure.
All right, now let's dive deeper into those Bitcoin ETFs and see how they might shake things up for the price of this mysterious digital asset.
So Bitcoin ETFs, or exchange-traded funds, they're basically like baskets of assets that trade on stock exchanges. And in this case, the assets are all tied to Bitcoin.
Right.
So it gives investors a way to, get in on those price movements without actually having to own any Bitcoin directly.
So it's like
Yeah.
you get a slice of the pie without having to deal with all the technical stuff, like setting up a wallet and all that.
Exactly. It makes it way easier for, big institutions and just regular investors to get involved with Bitcoin. And actually, we've already seen these things called futures-based ETFs. Those track Bitcoin futures contracts.
Right.
But all the hype right now is around these spot Bitcoin ETFs.
Yeah, I've been hearing about those.
The ones that would actually directly hold Bitcoin.
Right, right. What's the big difference there? Like, why is everyone so excited about the spot ones?
So those futures-based ETFs, they're based on these contracts that are basically bets on Bitcoin's future price, right?
Okay.
But spot ETFs would actually hold the Bitcoin itself.
Gotcha.
And that direct ownership, it makes a huge difference in terms of how it could impact the market and also for regulators.
All right. Right, because if these big institutions could suddenly just pour billions into Bitcoin through these ETFs, wouldn't that, send the price through the roof?
It could. I mean, that's why everyone is so, anxious maybe
Yeah.
about the spot Bitcoin ETF. Some people think they would bring a ton of new money into the Bitcoin market,
Right.
which would mean more demand and a higher price.
But hasn't the U.S. Securities and Exchange Commission, the SEC,
Yeah.
haven't they been kind of hesitant to approve these spot ETFs?
Yeah, they have.
Why is that?
Well, they're worried about things like market manipulation and all the volatility with Bitcoin.
Right, because it is a volatile asset.
It is, yeah. And, Bitcoin's still a relatively new thing, and it's not really regulated in the same way as traditional markets,
Right.
So the SEC, they really want to protect investors and make sure there's no funny business going on.
So they have to walk this fine line between, letting innovation happen, but
Protecting people.
protecting people, exactly. So I get why they're being careful.
Mm-hmm.
But if these spot Bitcoin ETFs do get approved, wouldn't that make Bitcoin look more legitimate?
Oh, totally. When a big regulatory body like the SEC gives something the thumbs up, it sends a signal, to those traditional financial institutions that Bitcoin's the real deal. And then you could see this huge wave of adoption. Pension funds, hedge funds, even just, everyday people could suddenly have a much easier way to invest in Bitcoin.
Right, so it could really change the game for Bitcoin. But ETFs aren't all sunshine and roses for Bitcoin, are they? Are there any downsides we should be thinking about?
Yeah, I mean, one concern is this risk of market manipulation,
Okay.
If ETFs become super dominant, they could actually start to distort the real price of Bitcoin.
Well, wow.
And then it could become way more vulnerable to these big price swings that are driven by, these huge institutional players.
So it's on the one hand, ETFs could bring more money into the market, which would make things more stable. But they could also bring a whole new set of risks.
Yeah, it's a trade-off for sure.
Yeah.
But I guess that's what makes this space so interesting, right?
Yeah, always something new happening. Well, speaking of exciting things, let's talk about Bitcoin's price history. I mean, it has been wild, to say the least, those huge booms and busts. Is there any rhyme or reason to all of that? Like, do those cycles actually mean something?
You know, if you look closely, there are actually some pretty clear patterns in Bitcoin's price history. Those cycles aren't just random. It seems like they're driven by a few different things, including those halving events we were just talking about.
Right, the halvings. They do seem to kind of kickstart those bull markets, right? Those times when the price goes crazy high. Why is that?
Well, remember, the halving means less new Bitcoin is coming into the market.
Right.
So suddenly it feels more scarce, right?
Yeah.
And then you throw in all the media attention and people getting really excited. And well,
Wow.
you've got this recipe for prices to go way up.
It's fascinating how much of this is just psychology,
Huh?
like fear and greed.
Mm.
Those seem to be just as important as any kind of fundamental analysis.
Totally. People see prices going up and they want in on the action, right? They don't want to miss out on getting rich.
Right, classic FOMO.
Exactly. But those periods of super high excitement, the euphoria, they're almost always followed by these corrections where prices come crashing down.
Right.
And that's when people start cashing out and suddenly fear takes over.
Yeah, that's the part that hurts.
Yeah. And that can trigger this whole cascade of selling and, well, prices drop really fast.
It really is a roller coaster. But
Yeah.
knowing about these cycles, like actually understanding the psychology behind them, that can help people be smarter about how they navigate the market.
Oh, absolutely. When you're aware of these patterns, you're less likely to make emotional decisions, based on fear or getting too greedy.
Right.
And it can also help you see those buying opportunities, especially during those accumulation phases when prices are low.
So it's more like a roadmap, not like a fortune teller or something.
Okay. It's not going to tell you exactly what's going to happen, but it can help you kind of understand the terrain,
Right. And avoid some of those big pitfalls.
Exactly. But just like a roadmap, I mean, there are always going to be those unexpected detours and roadblocks. No two cycles are exactly the same.
Right.
And you always have to factor in those outside things that could happen, those things nobody expects.
Right. Those black swan eggs like we were talking about earlier.
Mm.
The only thing that's certain with Bitcoin is, well, change.
Yeah, pretty much. It's constantly evolving. It's this mix of technology, market forces, and I don't know, human psychology, And
Yeah.
that's what makes Bitcoin so fascinating and also so hard to predict.
Yeah, it's really a puzzle.
It is.
It's making me realize that trying to figure out Bitcoin's price, it's not really about finding this magic formula to get rich.
Right.
It's more about understanding this really complex thing that's still evolving and trying to figure out where it fits in this whole world of finance that's changing so fast.
Yeah, I think that's a really great way to put it. It's not just about the numbers. It's about understanding what those price movements actually tell us about, the world we're living in.
Yeah, wow. That's deep. It really is amazing to think about, this digital currency that someone just dreamed up not that long ago. It sparked this whole conversation about like the future of money.
It really has, yeah. It shows you just how powerful these disruptive innovations can be, right?
Yeah.
Bitcoin really challenges the entire foundation of our financial system.
Right.
It forces us to rethink all these assumptions we have about value and scarcity and who's actually in control.
We've covered a lot of ground today. Everything from those analyst predictions to those crazy models, the miners, the ETFs.
Yeah.
What do you think is the biggest takeaway for everyone listening? Like, what's the one thing they should remember from all of this?
I think the most important thing to remember is trying to predict Bitcoin's price is kind of a fool's errand.
Oh, wow. Really?
Yeah, there are just too many moving parts.
Right.
Too many things we can't predict. To say, oh, the price is going to be X on this date, it's just
Right.
not really possible.
So are you saying we should just give up?
Yeah.
Like, stop trying to figure it out?
No, not at all. I mean, we may not be able to predict the future perfectly, but we can definitely learn from what's happened in the past.
Right.
And we can try to understand those forces that are at play, at least get a better grasp on those.
So it's more about understanding why the price moves the way it does, not just what the price is at any given moment.
Yeah, exactly.
Gotcha.
Like when we look at all those prediction models and we think about those historical trends,
Yeah.
we can start to get a clearer picture of Bitcoin's potential, right? And where it might fit into this whole evolving world of finance.
It's like we're, I don't know, detectives or something. trying to piece together the clues to solve this big mystery.
I like that.
Yeah. And with any good mystery, there are always going to be surprises, right? Like just when you think you figured it out,
Something new happens.
something new happens.
Yeah.
And Bitcoin, it always seems to keep us guessing. It's kind of exciting in a way.
It is. It definitely keeps things interesting.
Okay. Well, before we wrap up here, I have a question for you.
Yeah.
And for everyone listening too. If you could design your own model for predicting Bitcoin's price,
Oh, wow.
what would be the most important things to consider? What would you build into that model?
That's a great question. I mean, there's so much data out there you could use.
Right.
All those on-chain metrics, like how many transactions are happening, how many people are using Bitcoin,
Yeah.
macroeconomic stuff like inflation and interest rates. You could even factor in social media and what the news is saying. But I think the models that will really be insightful, the ones that really work, they're going to have to account for the human element because people are unpredictable.
They are.
And those emotions, those feelings of fear and greed and, hope and despair, those drive so much of what happens in the market.
So it's not just about the numbers, it's about psychology too.
Yeah, I think so.
Wow, that's really interesting. Because in the end, the price of Bitcoin, or anything really, it comes down to what people think it's worth.
Right.
And what they believe can be influenced by so many things. Some of them logical, some of them not so much.
Right.
Well, I think that's a great place to leave it for today.
I think so too, yeah.
We've really gone deep into the world of Bitcoin price prediction today. I hope everyone listening feels, I don't know, a bit more informed, maybe a little more energized to keep learning about this stuff. Any last words of wisdom before we sign off?
Just to say, this isn't the end of the story. Bitcoin, it's still a work in progress, and I think there are going to be a lot more twists and turns in the future.
Oh, sure.
So stay curious, keep learning and never be afraid to ask questions.
That's great advice. And to everyone listening, we want to hear from you. What really stood out to you in this deep dive? Anything that surprised you? Or maybe something you're still wondering about? Leave a comment below, and let's keep this conversation going.
Definitely. And if you want more deep dives on all sorts of fascinating topics, well, hit that subscribe button and that little notification bell so you don't miss out on our next adventure into the world of, well, everything.
That's right. Until next time, fellow knowledge seekers, keep exploring, keep learning, and keep diving deep.